Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
China, the big dog in the world now. The first question we ask in the morning, what's happening to China? No matter what we're trading, it seems like, and especially in the currency world. China has I think regardless of how you define a bubble, China's bubble is a bubble or it's a massive bubble, one or the other. We think it's a massive credit bubble in China. We think they understate their relative debt in their economy in a very, very big way because of the way the numbers come out. But the fact is they have a massive bubble in China, and a rising U.S. dollar perversely will tend to take some of the pressure off of that, because a rising U.S. dollar that goes hand in hand with what I've shown you here tends to mean you're having demand coming back into the U.S. economy. You're creating those jobs. You're increasing the real economy. The pressure comes off of China because then they have that external source to take some of that massive amount of capacity that they've created. They've created overcapacity because of the amount of money they've pumped into their economy to keep jobs afloat and keep the GDP going. The U.S. has to recover in here to take the pressure off of China. There's also a secondary add-on to this. As the U.S. dollar starts to appreciate, the relative value of the Chinese currency, the yuan, starts to appreciate, and that means you see protectionist pressures or concerns start to be alleviated. If China then takes the next steps that make some type of revaluation, which we don't think we're going to see much of, even if they do, but that leads to, again, helping this whole credit bubble situation, alleviating that to a large degree. So from a global macro standpoint, it makes a lot of sense, and it has been for the last several months, for the U.S. dollar to be appreciated in terms of healing the global economy in a way that relieves these concerns in Europe and China, which happen to be the two worst-case scenarios that we're going to talk about. So hopefully that makes some sense. And before we get into that, this is really where we see the relative block valuation, the relative currency block valuation in the world. We try and we try and first have dollar scenarios in our head or on paper. That's our first piece of analysis, and we like to have two different scenarios at least regarding the dollar. One is our most popular scenario, or our most confident scenario, which is the one I just shared with you, and the other is something that says, hey, we're completely wrong, and this can happen, just in order to keep us open from a trading perspective. You don't want to get locked in or fall in love with your story, whether it's a long-term story or not. If you fall in love with it, you tend not to be open to negative information. So that's why we try and have two major scenarios on the dollar. I won't go into the second scenario. I just shared our most confident one. We also do that with the various currencies from each of the major currencies, but we also do it primarily first from a block standpoint, and this helps zero in on what we think where we can find valuation in the currency world. We break the currencies really into three blocks. You probably could do more, and there's some parsing in here, but I think this is a good general bucket in which to think of these things. And if you think of it in this way, I think it'll help you make your own currency decisions when you think of global macro and you think of various asset classes that are hot or not. The savings block, number one, really is the Euro block currencies. When we say savings, we're thinking demographically, the people are older in those countries. They have a lot of pent-up savings, and therefore we refer to those as the saving blocks currencies of the world. The commodity block, and I think you're familiar with this, talked about a lot, especially with China in the news. Aussie, Canadian dollar, Kiwi name for New Zealand dollar. You also have in here what we just talked about, Brazilian real, Mexican peso to a large degree as a commodity currency, South African rand, Russian ruble. All those are commodity currencies, just showing the major commodities here, commodity currencies of the world in terms of the major currencies. So you have the commodity block. And then you also have the trading block. The trading block are those currencies in the world that really have growth independent on trade, global trade, and that's primarily the Asian bloc. Now we see that also in the commodity bloc to a degree, so you see some crossover. They have to have trade and demand for commodities, obviously, in order to grow, but we think of pure trading bloc currencies that have export-driven economic models. We're thinking more of the Asian bloc currencies, Singapore dollar, South Korean won, Thai baht, things like that. The yen is very much a Asian bloc currency based on trading is the key for them. But the yen really is kind of an outlier in here in terms of just the way it acts in the world. It kind of flies in its own orbit, but we have to categorize it in here in terms of the Asian bloc. But as I said, it's kind of an outlier and does its own thing. So from a valuation standpoint, we look at these, and as I just talked about before, the euro we still think is overvalued, probably 15 to 20% on a fundamental basis. The pound has had a lot of squeeze out of it. We still are relatively overvalued. Swiss is the same. So if we looked at the euro block, we'd have to say that's an overvalued block. If we look at the commodity block, we've seen a huge move in these commodity currencies against the U.S. dollar. We think a lot of this growth expectation has been priced into these. Not to say that they're going to fade here if the growth continues in the world, but from a relative standpoint compared to the U.S. dollar valuation, we think this block is very much fairly valued. On the trading block, again, the yen is the exception here. Let's say ex-Japan in here. From a trading block standpoint, the Asian currencies are, on a long-term basis, are extremely undervalued, and they're extremely undervalued because of this. They've had to really suppress their currencies over the years because they're competing with China for trade to the West. And because of that, and because of China has manipulated their currency, tied it to the dollar, relatively forced the value of their currency down, these other currencies, explicitly and implicitly, these countries have done what they can to suppress and keep a lid on their currencies. So we see this as extremely undervalued, and I think this, so if you just think of it in these terms, these blocks, we would say we're going to squeeze some valuation out of here. We want to be long here, so one of our pairings is we want to be, if you just think about it, we want to have, if you think of it in the option world, we want to have puts on the euro block currencies. We want to have calls on the Asian block currencies. And the commodity currencies, I think they're in between there. We think we're going to see intermediate term moves based on ebb and flow of risk in these relative to the U.S. dollar. Again, relative to the euro block currencies, we want to be long the commodity block, short the euro block. So in general, we want to be short the euro currencies. We think there's overvaluation there from just a long-term bucket standpoint, and hopefully this type of analysis helps you a little bit and think about it in this way and help you zero down on your currency choices.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.